Welcome back to another episode of Shore to Inform, presented by Jersey Shore FCU. And Daryl, what are we talking about today?
So today we're here in our Northfield boardroom, and we're going to be talking about your credit score.
Question number one. Daryl, what is a credit score and why is it important?
All right, so your credit score is a concrete number that determines your credit worthiness. Why is it important? It's important because lenders need to establish a number to see how responsible and reliable you are. In order for them to give you money, they want to determine how reliable you are if you can pay it back.
Question number two. Who are the people that control my credit score?
Well, Garrett, there are 3 credit bureaus that control your credit score. They provide the number to any specific lender. Those 3 are going to be TransUnion, Equifax, and Experian.
Okay, Daryl, so now that we know who keeps track of that credit score, what is the credit score actually used for?
So your credit score is used to basically give you a loan, in layman's terms. So there's a FICO score, which stands for the Fair Isaac Credit Score, and there's a range from 300 to 850. There's a range depending on how suitable you are for a lender to give you some money. So typically it's anywhere 300 would be the lowest, up to 580 would be a bracket where you would be considered poor. The next bracket would be from 580 to about 640. They would consider that good, but you still might need some work in your credit history. So then we go from 680 to 740. That's good credit right there, and anything above 740 would be considered excellent.
All right, Daryl, so you said that my score affects loans. Okay, so in what way? So if I had a low score, how would that affect my loan process?
Correct. So lenders can basically use your credit score to determine an interest rate for the loan that you'd be applying for. A better credit score typically means a lower rate, which saves you money over time. If your score is on the lower end of the spectrum, you might be charged a higher rate, so it might be a little bit more costly to have poor credit.
Okay, so if my score is too low, is there a chance that I won't get the loan?
That is a possibility. There's always a chance of you being denied a loan based off your credit score.
So after these last questions, we've established that credit scores are very important. So how do I find this magic number? How do I check the score?
Right, so there's 3 ways that you can basically get your credit score. The first one would be you're applying for a loan, the lender's pulled your credit, and they give you your score. Now, I would recommend only applying for the loan when you're ready to, because that actually will affect your credit just applying for the loan. The second way is that you can seek out credit monitoring services. There's a couple popular websites out there these days that provide pretty much 24/7 credit monitoring. They give you updates, it seems to be weekly.
Correct.
The last way, and probably the most important way, is that the U.S. government set up a website called annualcreditreport.com. Now, this is a website established by the FACT Act, which is the FACT Act in 2003. This allows consumers a copy of your credit report once per year from each of the 3 bureaus.
Okay, so we said there's a lot of ways to check it, some good ways. Now, why does it seem to be different every time I look at it?
Yeah, now don't panic. That's actually very common. Your credit score can fluctuate on a month-to-month basis. It's not uncommon to see a difference of 5, 10, 15 points going from month to month. Now why is that, right?
Yeah.
So there's a couple different factors that go into the actual number itself that lenders will reference. Basically, out of 100%, roughly 35% of that is based off your payment history. So
Okay.
even one missed payment could kind of subtract your score. You could lose some points for one missed payment.
Right, 35 is a big chunk.
Right. Another big chunk, roughly 30%, would basically be the amount of money that you owe at that present moment. So let's say you had 3 different credit cards and you had a $150 balance on each. The lenders will say, well, what is that percentage based off of your total available? Just to recap, how much money do you currently have out?
Oh, wow, okay.
Some other factors that aren't that big of a deal, but some people obsess over, is the amount of credit accounts that they have, so your number of accounts. Lenders will look at, well, how recently were those accounts opened? Were they all opened in a short period of time, or were they spaced out? Another small percentage of that is going to be, accelerated usage. Are you using a high amount in a short amount of time?
Okay, gotcha. Yeah, no, I've seen all those before. Yeah, that makes a lot of sense.
And then something that maybe carries a little bit more weight than those previous two would be the length of your credit history. How long have you had established credit? You're going to want to start to establish a credit history, especially if you're going to be making some large purchases in the future. I know I'm a potential homeowner,
Right.
and I've been tailoring, my credit services here at the credit union to kind of prepare for that big purchase.
All right. So we just talked about what makes up the credit score. So how do we improve it? How do we get it better? How do we get that, close to that 800 as possible?
Yeah, let's share some tips here, Gary.
Right. Time for tips.
So number one, you want to pay all your bills on time. I can't make that.
That is the one thing to take. If you're going to take away anything from this
Make that
video,
more important.
take away from
Pay
the
your
video.
bills on time. I mean, use auto pay if you can. I've got burned in the past forgetting to set up an auto pay. You might miss your first payment. There you go. One missed payment. You're gonna have to build yourself back up from that. So use auto pay if you can, if you like it, if they offer it.
Right. If you're a forgetful person that might forget to pay their bill, have it taken out. If you know you can cover it, have it taken out automatically.
Set it and forget it, or pay your bills on time.
Yeah.
Period.
Very true.
Another good tip. This might be a little bit difficult to understand, but it's called credit utilization. I touch on it briefly. If you have X amount of credit cards, you want to look at what your total limit is in total. And then you want to use about a quarter of that. So 25% of your total usage.
Right. So if it's a total of 10,000, we want to stay around 2,500.
That's correct.
Okay.
If you have 5 cards and they all are $2,000 limits, you want to use no more between all 5 of those cards than 2,500. Another tip is you don't want to max out cards. You want to leave some room there.
Right.
You don't want 100% on one card, but at the end of the day, you want about 25% total.
So some additional tips that we didn't talk about. The big one is don't co-sign for somebody else that doesn't have good credit. Sometimes it's a good friend or a family member, but it really is your reputation on the line if you do that co-sign. So just be very wary of who, you put your signature down for.
Yeah, just because you co-sign doesn't mean it doesn't count against you. When you co-sign on a loan, it reports on you too, even though you might not be making the payments.
And another big one we talked about, we're going to talk about is don't close your old accounts out.
Yeah, keep your old accounts open. You want to keep them active. You might not be using them, but believe it or not, when you close out a credit account, you've then decreased the total amount available, which then would increase your total utilization.
All right, so we're going to give some additional resources for people to look up some additional information or just to keep on top of things. So what do you have for them, Daryl?
Yeah, so a couple good resources we got for you. We already talked about the annualcreditreport.com. That's a big
Right.
one. You want to stay on
Correct.
top of that. Also, there's 2 different government agencies. One's known as the Federal Trade Commission.
Right.
The other one's going to be the Consumer Financial Protection Bureau. So basically what they do, they protect consumers. There are ways to dispute inaccuracies in your credit report. If you notice that there's something incorrect on your credit report, what you're going to want to do is contact the credit bureau in writing and let them know of the discrepancy. Once they receive a dispute, they have to investigate. They have 30 days to make an internal investigation and then respond to one of those agencies. And then they would then respond to you as the consumer of the findings of that. It might be removed, it might be fixed, it might be accurate, but there are ways to report or handle discrepancies or inaccuracies.
Okay, to sum up our video, we're going to hit you with some quick bullet points, things to remember. Run them down.
All right, so your credit is important. It's going to help you obtain financing for a home, for an automobile, or for other credit cards or any types of loans. You want to stay on top of your credit score. If it changes minimally, don't freak out. Take confidence that you are monitoring it. It might change, slightly is okay. If it makes a major change, you're going to want to contact one of those resources and get a report so you can review it. You might need to file a discrepancy. Lastly, as always, you can always sit with a representative from your credit union to help better understand your credit picture.
All right, that's all we have for today. If you have any additional questions, leave a comment below and we'll be sure to answer. Thank you for watching.
Sure to inform.